Welcome to Exchange Rates UK TV. It is the 27th of November 2021. Taking a look at Ethereum here. We're going to take a look at the 3-week chart first, the 3-week Ichimoku chart. So you've got some regular bearish divergence here between the RSI and the candlestick chart here. Sorry, not the RSI. One of my custom indicators, that's where it's at. I'm thinking of the other chart that I'm going to show after this. But there's some hidden bearish divergence here, and but nothing really screaming, oh my gosh, it's going to totally collapse here. There is still a pretty good gap between the current 3-week, the body of the current 3-week, oh my gosh, the body of the current 3-week candlestick and the Tenkan-sen. There we go, I got it. And then you have, the last 3-week candle, same thing. You have a pretty big gap between the body of that candle and the Tenkan-sen. Something to know here is that, within the Ichimoku system, gaps between these guys do not last very long between the Tenkan-sen. They often resolve between, if they last more than 4 candlesticks, between 4 to 6 candles after that is when it will correct, or not correct, but move back into equilibrium, meaning that price action will slide down back to the Tenkan-sen. So that is something that we should be on the lookout for. But at the same time, the gap isn't massive, and there isn't a huge gap between the current close and the Kijun-sen. Nothing here is screaming right away that the end is nigh, and we're not in an overly massively hidden divergence. A regular bearish divergence is not very strong to begin with, so I wouldn't look at that too much. But when you go to the weekly chart, little different story. The RSI here, we do have some flat highs and some higher highs on the chart. So that is a little bit of regular bearish divergence. And we do have the composite index. It's crossed below its slow average, and it's crossed below its fast average, looking like it wants to close below its slow average as well. And you have the %B dipping down below the 0.8. So there are some signs here that this could travel a little bit lower. The Senko span B is at 3,300, so it could travel that low. It has come down as low as 3,800 to test the Tenkan-sen. It's bounced off of it, but it remains to be seen whether or not that's going to be something that holds. Then we come down to the daily chart. What do we have going on here? Big drop yesterday, kind of pretty much following equity markets. There was a more than 11% move, and it closed lower by 10.65%. A little bit of a bounce today. We've returned inside the cloud. Pretty standard bear flag there. And currently what's happening today is we're testing the breakdown below that flag. And that flag is right here. There we go. There's that bear flag. Broke down below. The high of the day kind of so far has topped out against the daily Tenkan-sen and the top of that bear flag. So that's something to watch out for as far as a sign of weakness. And is this just a temporary rally? But the move south is still something to look at. When we were looking at the weekly chart, that weekly Kijun-sen at 3,300 matches up with the 382 retracement that's drawn here. So there's a pretty good support zone down there if it does travel lower. So that's something we'll want to watch out for. But on a bullish note, the RSI still in a bull market, and Ethereum has found support against it. It's holding so far still. Certainly, if we close below this bear flag and we close inside the cloud today, that could signal price lower. If we want to look at a bullish a bullish event, if we're looking for something that will resume the bull trend, we need to get above 4,600. But for right now, it's kind of a touchy zone to look at and hard to get a good read on, especially because it's inside the cloud. The cloud is a horrible place. But we'll update it as needed. Thank you for watching. Hope you all have had a great week last week. Hope you have had a safe weekend so far, and look forward to talking with you next week. Thank you for watching. Please don't forget to like, comment, and subscribe.